Hello guys, welcome back to this video. Let me explain to you how I managed to take this trade and it's marked at least a 1 to 6 risk to reward trade, and everything documented in my Telegram here. This is how it all started, and this is how it all ended. So I documented it somewhere here. The Telegram is free, so I'm already in B, got an entry on retrace and scale in, so hoping to get at least a 1 to 6 RR, and then USDT smashed just about 5 minutes, about 9 minutes later. TP was heavily smashed for a more trade breakdown. I also showed this. There were some of my friends in this group. This is free group, you can join. Also wanted to take a gold trade, so I did for them analysis of trade and how I would take it, and then this was the outcome. Eventually it hit, but it was catapulted by the news. So let me break down how this trade came to be. So we start from the daily time frame, but before that I would wish to show you the criteria, as I always do. I wish to show you the criteria under which we take such trades. So let me just a minute. So this is my trade checklist. So let's copy it and paste it somewhere here. So that is my trade checklist. What about the things you need to know if you are watching this for the first time? If you are not watching this for the first time, then you know the kind of things you need to understand. You must know 4 hours fractals, highs and lows, order flow, market structure, inducement, supply and demand, single candle order block, and you must know valid pullbacks. With this, you can trade this strategy perfectly. And by the way, this is the only thing that from number 2 to number 7 is only ideal for you to get the entry. Otherwise, for daily buyers, it's very straightforward. Like in this case, if I just run you down, if I just run you through the process of getting the daily buyers, this was the daily buyers instructions. So let me place this somewhere here. So let's delete this and start afresh. So as you can see, this market has been breaking structures on the downside, so it took liquidity here. Why was this liquidity? Because I was expecting that this market to keep pushing down here eventually, because as you can see, this is momentum going, and then at the same time I really didn't expect this to hold. So this is the last pullback. I didn't expect it to hold. So but this is not important to me. This all part that I will just explain is not important. What is important is following what the daily candle did yesterday. I'm just giving you an overall picture of what the candle did yesterday. Even if it wants to buy, is none of our business. So what we do is very simple. We come to the chart, and then as you can see, 1 2 3 4, these 3 candles were selling. What is our business? Buying. This one, we consider it a pullback, because we don't expect the market to be moving in one direction eventually for eternity. At some point we'll pull back, and if it pulls back, it is even juicier, because we know that the following day people will be expecting buys or trades in those opposite direction. But what will we be expecting? We'll be expecting the continuation of the overall trend of the few candles. This is few candles. This is what we are observing. When we are observing this, we are also observing just this. When we are observing this, we just observe the current candles, the first 4 candles. is just enough to give you direction. The last 3 days or 4 days just enough to give you direction of where you should be buying. When it came here, we were just observing this direction, and then when it started selling from this point, we were starting to sell. Here we are still buying, here we are selling. When this candle closed here daily, now the rest of the time we were just selling. Same to here. This was just a pullback, and now we are just selling until we were selling here. This was pullback again, we were equally selling here. There was a very good trade here because, as you can see, eventually it sold down. Then the following day it closed bullish, so 1 2. That means that the third day we are supposed to be buying here, but then it doesn't work, or it gives very bad trade, or 4 hours. That is why we have 4 hours fractal, 4 hours fractal price action to know whether we are going to have trade or not. Like today, gold is supposed to be selling, but 4 hours is buying, so we just ignore, knowing very well that the market is about to pull back. Now in this case it can be 4 hours. 4 hours would be selling, yet we are expecting to be buying, so we just ignore it. Then the following day we try to buy, the same thing happens. We consider this pullback. Now this, the same thing happens. We don't see those buys coming in 4 hours. So when this closed the third day, we are now back to sells. Again we are selling here, and then it doesn't work. We sell here, it tries to work. So when it fails to work here, you can see we are expecting that after this pullback we are expecting sales. So the next time we are expecting sales here worked. You can see there was a wick here but eventually it closed upward. So the next day we were buying, simple. Then we are selling here, but doesn't work. It closes here. That day we are selling, and now it closed above here, so it means it closed bullish. It means we are supposed to be selling. This is just a pullback. So what happens, we mark the day and we mark the highs and the low. That is what the strategy says. Mark internal range in days, so that we know we are trading from what point to what point. This is our trading range. This small box here is just enough to give us a 1 to 3 risk to reward. Simple. We don't want to complicate the market. This other additional complication is me placing them because I'm an advanced SMC traders. But for anybody who is watching this thing and is not advanced, don't mind this. Just follow what the daily is telling you. If the daily is telling, what is your business buying? If the daily is buying, what is your business selling? That is the same concept. Now just imagine if you are following this concept here, from this point, from this day here, it closed here bearish, selling. Your business just to sell. Same here, just business. This is the second day. The third day is buying. This is the second day, closing bearish. We sell. It bought, and I'm not sure what was happening here. We are supposed to be selling. Then here we bought because maybe this closed bullish. I'm not sure. We have to check. Then this failed. This was second closure. Sells. Again sells, but it doesn't work. So we try to sell here. It doesn't work. Third day we buy. We buy. It doesn't work. So like in this case, if this was that much engulfing, I wouldn't buy the following day. You can see the way this was so abnormal. Candle cannot just be overlapping 3 of them like this and then expect that this momentum will be preceded by a buy, when you can see that the overall market trend is breaking structures on the downside. So this I would just sell. Again, I will know that this is a pullback, so I would sell. There's a buy here, so you can buy, but know very well that the market is breaking structures downward from this point henceforth. So what is your business buying? So you buy, but you are cautious, not enough. You are cautious not to be fooled. So immediately this candle closes back red, you can take sales. Risky but worth it, because this was a break of structure down. This is pullback. We are expecting a break of structure again. So but you can wait for this to close bearish, and then third day sell, and then when this start to make such arrangement, you know that now we are pulling back to this zone, and then we sell. So that is the same concept we are applying here. So our trading range is Our trading range is from this candle's high here to this low, but we know that this is pullback, so we don't even mind. Even if you mark here, it's still okay. But just to give you a context of dealing on daily time frame, we just mark the days here, and this is the low of the day. So guys, if you hear noises from the background, just a confirmation that I'm a human being and I'm not staying in the bush, as much as I may wish to get them silent so that I can record this video peacefully. But those ones are children, there's nothing I can do. So just bear with me. We finish up. The most important thing is the concept. Now, after marking the days high and low, we know this is just pullback. So we go and mark the internal range in 4 hours. That is 4 hours fractal price action. So we shift to 4 hours. We shift to 4 hours. So at what time is this? So after shifting to 4 hours, now what do we do? What do we say? We are expecting sales, so we need to see 4 hours starting to take the lows of the previous day's candle. So we can see that the previous day was a pullback, and what was that pullback for? Let me explain. That is the reason why I simplified into marking the highs and lows. What happens here is, if you want to go detail into SMC, is that we had a push down, and then a push up on 4 hours, then a push down, then a push down. No IDM is taken so far. A pushed down, a pullback, push down. So this is just an IDM being taken and then tapping on this order block or on this fair value gap, and then we're expecting it to keep down. So to simplify that is why I recommend just dealing with the fractals. If you deal with the fractals and take note of daily closing bullish or lower when the market is selling, that is just an IDM sweep in IDM sweep in 4 hours, and let's say 8 hours, 12 hours. Those are the time frames. So to minimize that, I decided that I'm not going to stress myself knowing this. I'll just be marking the days highs and low, and know very well that I'm not naive to see price moving without taking IDM. So this is just an IDM, and then the market taps on high probability order block here, and then it pushes down. So that is why I'm not buying here, because it obeys almost all the laws. You can see we can only sell on premium, and then on the discount side we buy. But since we are trend followers, we don't do that here. All those ones are already factored in. Everything about SMC is factored in this strategy. So with that marked, let's proceed with the practicality. So the following day, we see that the market pushed upward, taking IDM. So this is not important. What is important is what it is doing now. What is it doing after taking this? Is it continuing to buy so that we leave it alone, or it is taking sales? As you can see, the market pushed here and then pushed upward. There is this inside bar. This inside bar was supposed to be causing up movement, but it reversed. It started causing breakout structure. So if you got it immediately here, this was so nice. You could have taken it from this point. From Asia, you could have taken it from this point and ride it all through. That is why sometimes it's nice to wake up early and take it through, because this is just confirmation that immediately start taking the low of this, we are going to sell throughout. So this becomes our daily 1 day high, and then this becomes a 1 day low. This should be the target, because when we are marking this thing, the price shall have not reached that level. This is 1 day low. We are expecting that this is week low, so it should be taken. This is week low, it should be taken. So what is our 4 hours fractal? From this point high to ideally because we have an IFC candle, it shows a pullback. So when it is breaking in either direction, that is how we mark fractals. Provided we have an IFC, that is where we look for fractals. So this becomes 4 hours protected high if market start taking the lows. So immediately takes this low, 4 hours as aligned, we are selling. So 4 hours as aligned with the daily time frame, which is supposed to be selling. So after marking this is taken. Next we're expecting this to be taken, this to be taken, this to be taken. So what happens is we go to 15 minutes and wait for our session to begin. But before it begins, we can confirm that we've marked external range that we are trading in that day, and then we've marked 4 hours internal range, 4 hours high and lows, and then we've indicated, we have confirmed that 4 hours is taking fractals in our direction, which is to sell, because daily is supposed to be selling, so we are supposed to be selling. So we need to see 4 hours taking the lows of the previous candle. Next, we need to monitor order flow in 15 minutes time frame and note the IDMs and other zones order flow. So we go to, this is the point at which it realigned, which was nice. Like I said, if you woke up early, my time, I'm Kenyan, so if you woke up early, this is the point at which it aligned. So this candle wick here is where it aligned, so this high became protected. So let's start monitoring order flow. So monitoring order flow is simple, so we just check from where the origin started. So this is liquidity being taken, and immediately liquidity was taken. This was supposed to be break of structure, yes, but since its low here that is heavily protected was violated, the order flow realigned. This is the low, that so we are having both low of 15 minutes and 4 hours fractal. So this is the low, this is the inside bar candle, this is the last pullback in lower time frame that was pushing upward. So this should not be taken. If this is taken, market has shifted down on 15 minutes. So as you can see, it was taken. It can be taken and market push back, it becomes an IDM. But to confirm that, we go to the second. We must only trade when we see the second 15 minutes order flow alignment. So this is first alignment, and then you can see a push and then a pullback. So this was second alignment. So everything here was now second alignment. You could even wait. Second alignment can be subjective, by the way. It can even start from just this leg, but what is important is the liquidity marking the order flow where it all started here. So this was all internal range, like I explained. Market moves in RIMC, which is range initiation, mitigation, continuation. Range initiation, so I only like to trade initiation leg. So when price aligned here in 4 hours, we wait for second break. Second break is here. You can also, if that is not enough, you can even confirm here. And why am I saying so? Is because this is our second break of structure down, and then it is high probability because it even took IDM, which is nice. It took IDM and then tapped on fair value gap above. So this was IDM that was taken here. It pushed down, it pushed down here, pushed upward, pushed down, pushed up, pushed down. So this is high probability zone. The problem is that it lacks good fair value gap, and the market is ranging a lot on it, so it can easily become high liquidity. But since, yes, it is out of our trading window, I only trade London Open and New York or crossover, so I know that this is just high. So when we met this 15 minutes closing down here, this was now third break of structure down. Market is really down, and we are trading initiation. Initiations mostly, they really don't pull back heavily, so I'm aware they don't pull back heavily. Check my video that I just did about trade breakdown in EU and NZD. They did not pull back. Now, as you can see, this was respected. Actually, if you check, I really tried to zoom in, and I realized that it took the liquidity here, so this becomes nice. So what I did was simple: wait for London to open so that I know that this is protected here. So I'm just waiting to see if the momentum is going to continue. Now, when this candle closed downward with this momentum just before my session open, so I was just expecting a pullback. This is momentum. This is indicating that the buyers are still in control, the sellers are still in control. So with that momentum, and I know this is initiation, I was expecting a push up, and then I go to 15. If this area is to hold, then 5 minutes I must see 5 minutes scope. So I went to 5 minutes to see what is happening there. So immediately London opened. Now everything has ticked in. I'm just waiting for entry, so which is entry is done in, we check supply and demand and then scope. So within here, when I looked at it, this area had already taken even liquidity from 5 minutes, so it was just messy. So I was waiting to see scope being formed here. So when market opened, what did it do? It really pushed down and then pushed up. This messiness a little bit shocked me, whatever was happening here, because you can see this heavy jump closed here and then it starts here. So I think there was some news or whatever was happening, I don't know. So it really got me worried. I didn't take that trade because it was not looking normal to me. But if we got a good push like this normally without this messiness, I would have taken sales when this candle closed. When this candle closed, this becomes the scope, 5 minute scope, showing that now price is aligned in my direction, and I would have targeted at least a 1 to 3. So at this particular point is where I didn't like whatever was happening there. So it got me a little bit confused of whatever is happening there, and then I'm not even seeing news. So maybe this where I take Forex Factory did not show me news, so this was not normal to me. It got me a little bit worried. So this was the right entry. So I just became quiet and watched it more. So when I watched it more, I thought it would break here, but then what did I see? I saw it breaking downwards. It was so nice. So when I saw it breaking downwards, I knew very well that it is aligning well. So I wait for pushback into where I wanted to take the trade. I wanted to take the trade on this fair value gap. So by the time I was watching it again, the price was already playing somewhere here. So here is where I got my trade. I don't know, can't even remember where I placed my stop loss. So can't remember well. I'll check well from the Telegram group. That is why I post Telegram, to know where I placed my stop loss. And then I got a scale in. When I saw this momentum breaking down everything, this momentum, I waited for a pullback to get another re-entry somewhere there. I thought it would pull back to this, but when I saw these hesitations, I just took it from this. This is where I remember stop loss was somewhere here. I think it was around 5 pips, can't remember well. 5 pips stop loss, and then targeted 1 to 3. So this one, at least I think it passed a little bit. So those were the most ideal entries there. Those ones are the most ideal entries. So those ones were the most ideal entries, and therefore the trade moved faster into taking TPs. So like I said, this was a little bit more, because there's something I was doing, and when I came, I realized that the price was here, so I just closed. So those ones were the trade. Now this trade is here. So I think this madness that occurred during London could be news or algo issues, because that jump after the close down is not normal. It got me confused and now the price could possibly be leaving without us. That was my thought, and this is it before it happened. So everything was marked well. I was hoping to see this being taken with this move here and then tapped on this decisional point of interest, but everything was aligning well. As you can see, I was aligning everything well. So USD, I'm already in BE, got entry on retracement and scaled in, so hoping to get at least a 1 to 6R. So score, yeah, my stop loss was above here. Nice. And then this one was somewhere there. So what happened? USD CHF TP smashed 6RR, and that is how the trade ended. This was more than 3. Yes, so I got in there, and then so again a similar trade that I wanted to show you is this gold. As you can see, gold is supposed to be selling. Ideally gold is supposed to be selling because this is our target. But when we wake up, what do? You see that instead of breaking structure downward, it is breaking upward. So we have no business trading. This is a situation whereby we are expecting to sell, but the market does not give us entry. That is why we have 4 hours fractal to help us know whether the market has aligned. In this case, the market has not aligned, so most probably it may even end up taking the highs, and that is okay. We don't take trades, we don't get stopped out. So I gave the condition here, analysis. This was a sweep, this is first break, and we don't even have second break in the first place. So that is why I don't like this trade. We need to have second break. So to take this entry, I was explaining to people who trade gold, because I don't trade gold, this becomes an extreme point of interest, and therefore I need to see first break again. This is internal. I need to see first break, and then I need to see a pushback, and then a push down, and then a second break, hopefully, and then I will go to lower time frame, 5 minutes, and then look to see if this will become IDM, or I would just get an entry here, because nobody said that we must always have trades taking IDMs or inducements. So you go to 5 minutes here and then wait to see if it will pull down. But this is low probability trade because we only had a sweep and then a push down. No second pullback, no second push. So this could just be a liquidity sweep, and then this becomes, it could reverse. This could be break of structure, and this could be liquidity sweep. Therefore it becomes unreliable. That is why this criteria is here. This criteria is here. This enter in second 15 minute scope, enter on 15 minute scope. If you see second break of structure, now as we speak now, so let me just confirm gold as we speak, you can see it's 5 minutes. I can't remember where I marked it. You can see oh, I'm wondering, I need to remove, got me confused. Now this is where I marked it for my people, and as you can see, it is playing exactly like that, the way I marked it out. But now I want you to note something. Of course we got 5 minute scope here. After this place, it really tried to obey this by marking. This was marked, let me just confirm, this was marked at 1 p.m. my time. This is Kenyan time, and currently it is 8 p.m. at night. So this was marked at the end of the day. So this is what just tried to happen. I don't know why it is mimicking my chart. I didn't mean to see it exactly happening like I projected it like this. I didn't mean to see it like that, but that was just the overall projection. So I would enter here when I see 5 minute scope. But the reason why I said I wouldn't take this is because I was explaining to people who take it, I wouldn't take it because I needed to see this candle being taken here so that I can have my checklist. I know I disobey my checklist, but I don't like disobeying major ones, like seeing second break. So most probably it will sell, yes, but as you can see, it came here and immediately it started misbehaving. Now it came here, gave me scope, and immediately stopped me out. This was nice scope, and immediately it would have stopped me out after taking the inducement. Stopped me out. So that is so bad. No even movement. Now again, it came to this point. This is the extreme zone, though there are structural liquidity here. Then gave scope, gave entry, and have a bigger stop loss. Stopped me out. So it is like you're making liquidity for the buyers. Why? Because market only align when you see double break. Market only align when you see double break. So internal double break, no, external double break. We needed to see this being taken here. If this was taken here, this would have been a good structural liquidity. So I don't mean that it won't work. It can work. This zone can still hold, because this can still become a structural liquidity, though there is no high probability order block anymore, because this has already done its purpose. This is already mitigated, so you can't say that you're going to enter here again. This has already done its purpose, and that is what it sold here. So even if I was to take this trade, I wouldn't take it on 5 minutes here because of what is happening down here. I would have waited to take it on 15 minutes scope, like just what is about to form here. If I see the momentum too much, it is easy to enter. I don't trade gold. I'm just explaining for people who trade gold, because they are going to watch this video in my channel. So some of the people I know, like Sandra, maybe I've already taken a stop loss, because Sandra takes aggressive entry, and this was her entry, unless her stop loss is somewhere here. Then she's still on the trade, hoping to see that the trade works, hoping to see that is her stop loss, that is her analysis. Same thing. The difference is that I would have waited for scope to form here on 15 minutes. I just told her actually. So that is trade breakdown. I hope you enjoyed.